Yes, we are seeing some volatility in the stock market recently. 1,000 points in, intraday, but if you base on 29,000 points to 30,000 points Hang Seng Index, it's in fact less than 4%. We are seeing some investors who put lots of money in the stock market in the last 2 years. They're taking the opportunities to make some profits. But on the other hand, there are some long-term investors. They're still very bullish on the longer-term outlook. Yes, they're still buying the stock markets. That's why you're seeing some kind of volatility right now. We still like sectors like the infrastructure sector, consumption sector, environmental sector, alternative energy, and healthcare industry. But again, in these sectors, you have to be extremely careful because there are companies that are with very good fundamentals and valuations. But obviously, there are also some companies that are very expensive in these sectors. In terms of what we don't like is that we think that for the industrial companies with very low margins, difficult to have pricing power, these companies will suffer. Renminbi continue to appreciate and wage increase every year. If they don't have pricing power, margins is going to go down further. Some companies may even be loss-making. Recall the internet bubble in the year of 2000. At that time, yes, that was a bubble because we were looking at companies without earnings. People will basically talk about burn rate. But nowadays, when we talk about Chinese companies, these companies are making profits with good earnings growth. Yes, valuation may not look cheap at all, but I don't think this is something what we call bubble, like what we refer to the internet bubble. Until July 2005, when they had the first appreciation, then people were looking into China, and people start to buy China market in end of 2005. And 2006, again, the local investors were a lot more bullish because they finally realized that valuation was a lot more promising and fundamental was also very good. So that's why 2006, the market was more or less like a catch-up play. The market moved up a lot. Even in 2007, people were still seeing earnings growth, so people jumped into the stock market. With the savings that people have, with a good sentiments, that push up the whole stock market. And you can actually see that nowadays the sentiment is completely different from 2005. Now I don't have a crystal ball to say what the stock market will be before Olympic game or after Olympic game. Obviously, that fundamental is still very good. Next year, 2008, we're still expecting at least 10% GDP growth for China. And earnings growth, again, MSCI China, maybe something like 20% earnings growth, and Asia, 30% earnings growth. So under normal circumstances, the stock market should follow fundamentals as well. I would say that when you want to buy or invest in, make investment, you have to really know what you're buying, what you're investing. You have to know your asset class, your stock investment. Do more work on that, do more analysis. When you actually buy a good company, I'm quite certain that the longer run, you will actually gain return.